Good morning, everybody. We've got a higher trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. December corn futures up 1.5 at 540.5. November soybeans up 1.25 at 12.85. December Chicago wheat up 4.5 cents at 7.14 3/4. December Kansas City wheat up 4 at 7.15 3/4. December spring wheat up 4.25 cents at 907 3/4. If you guys are listening on the podcast, appreciate it. Leave me a rating or a review. If you're watching on YouTube, hit that subscribe button, hit that like button. Help me out to grow this channel. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Click on Grain Marketing Plan. Check out this subscription service, guys. A ton of information direct from me for $49 a month. Monthly deal. Cancel at any time. No other fee, no other obligation. Check it out. We've got a USDA report today. This is the quarterly grain stocks report, so corn, soybean, and wheat stocks in the United States as of September 1st. We are essentially expecting and are very likely to see drastic year-over-year declines in U.S. stocks of corn and soybeans in particular. Ahead of the report, traders estimate September 1st corn stocks are down 40% versus the same date last year. Soybean stocks expected to be down 67% versus the same date last year. Wheat stocks expected to be down 14%. As is always the case with this report, it's a matter of what's expected and what is actually printed. We know to a large extent or degree that, yeah, the stocks numbers are going to be down sharply, but how do the actual numbers compare to trade expectations? That's what'll move the market. We've also got some wheat numbers coming out as part of that small grain summary report, maybe some update on the spring wheat crop in particular. We know that we had a crop failure in the northern plains. In regard to that crop, we may see some adjustments there. Historically, this is not a report that's associated with a ton of volatility, but the last 2 years in the corn market especially have resulted in big surprises. Like the trade missed the number by a couple 100 million bushels each of the last 2 years in regard to corn. So there is certainly the potential, especially in the context of just the last couple of years, for big moves in the markets here following this report. U.S. ethanol production remains generally sluggish, in my opinion. Weekly output, 914,000 barrels per day was the EIA print yesterday. That's down 1.3% on the week. It's down 4.6% versus the same week in 2019, which, of course, is your last pre-COVID benchmark year. Ethanol stocks have generally trended lower since July. They are the second lowest seasonally in 5 years. Gasoline demand is really strong. It was above 2019 levels last week. Ethanol, corn basis bids at ethanol plants in a lot of areas of the Corn Belt are declining fairly rapidly in some cases. So the ethanol producer here in this country should be able to buy some cheaper cash corn, and I would imagine we'll be back above a million barrels per day here, probably by the end of October, if I had to guess. But that is just speculation on my part. USDA has pledged $500 million to prevent the spread of African swine fever. Recent outbreaks in Haiti and the Dominican Republic are cause for concern here, of course. The concern would be a spread into the United States, which on the slim chance that does happen would be devastating. USDA will commit these funds from the Commodity Credit Corporation. The goal is to expand and coordinate monitoring and surveillance for the disease along with other efforts. A consultant with the National Pork Producers Council said this is unprecedented both in terms of the amount dedicated to one animal disease and of getting the funds up front before we have the disease in the U.S. So I suppose you can paint this as a positive and say that the government is being proactive here in regard to this. We know that we don't want anything to do with this here in the United States. The U.S. Senate has reached a deal to avoid a government shutdown. We are ready to move forward, said Chuck Schumer. We have an agreement on the continuing resolution to prevent a government shutdown, and we should be voting on that tomorrow morning, which is today. This is a stopgap bill. It's only good through December, and then they'll have to re-explore this. The resolution, however, will not address the debt ceiling debacle, which is probably the bigger issue here, in my opinion. They have until October 18th to resolve that issue. We've got a weekly export sales report this morning at 7:30. Kind of another lackluster week expected. Corn sales expected 400 to 900. Soybean sales expected 700 to 1.2 million. Wheat sales expected 250 to 550. That report will be out at 7:30. The cattle market finished lower yesterday. Marginal losses in the fat cattle market. down more than $1 in most of these feeder cattle contracts. I believe today is last trading day for September feeder cattle. In the outside markets, the U.S. dollar is higher and has been very, very strong. That is something that, in a lot of instances would pressure the commodity markets, although we're not seeing much of that. The S&P is up 17 points. The Dow's up 140. The bonds are up just a few ticks. Gold and silver mixed. Crude oil is down 61 cents in the November WTI at 74.22. Remember, guys, a big USDA report today at 11 o'clock a.m. Central Time. Everybody have a great day today. I'll talk to you Friday morning.